Mike's wife is on this call, by the way.
Oh boy. Oh boy. Okay, let's just give it another minute. Couple seconds and we'll get going. Let's see, there we are. Okay, all right, we're gonna start. All right, good afternoon, Berkshire Hathaway Home Services California Properties. Thank you guys for coming to this meeting. I know a lot of you were on the one that we had at 12 o'clock with Mike Turner, and that went fantastic. So thank you for attending that. That was Farming 2.0. I hope everybody got a lot out of that. We also hope everybody is safe out there. So, you know, a lot of stuff's going on and we care about you as our partner out there. So we want to make sure that you guys are all being safe. Today, we have the distinct pleasure of having a special guest on. As part of our Strive to Thrive campaign, CalTitle has been committed to bringing you guys valuable content, training, and as much highest service levels as possible during these crazy times. And today we have a special guest, as I said, and he's here to discuss one of the topics that is extremely relevant right now, and it's on a lot of people's minds. And I know there's a lot of questions and confusion over our topic today. So we're going to dive into that deep. One thing that I would ask is that if anybody has specific questions that are in regards to a specific transaction or something they're dealing with right now, if you could please write those questions down and get them to your title rep, because then what we want to do is we want to get those to our guest. We want to get them answered and get them back to you. But we've got a lot of content today. So first off, I want to introduce and welcome Bill Burding. Bill Burding is the Executive VP General Counsel for California Title, as well as 2020 President for the American Land Title Association. So thank you, Bill, for taking the time to be with us. And today's subject matter is the CARES Act and forbearance. So welcome, Bill. Thanks for being here.
Thank you. I appreciate that. I will tell you that one thing about this presentation is that it may very well change in a day or two or a week from now. So this is something that is a temporary, it's where we are today. I think we'll probably be in about the same place a month from now, but I can't tell you we'll be in the same place from 5 weeks from now or 6 weeks from now. So we may very well have additional conversations between now and then. The CARES Act is interesting. CARES Act has a lot of components to it. It certainly has components to people who are were working and they've been laid off, or they're an independent contractor and they're not making as much money as they were. Those are all very important issues that we can discuss, but I'm really not going to discuss those today. But CARES Act is a very expansive, multi-trillion-dollar bill that got through. And what I'm going to discuss today, and we can discuss, and again, if you want to discuss other parts of the CARES Act, there's parts of it that have to do with your 401k. There has stuff to do with all sorts of things. I'm only going to discuss those that had to do with mortgage and mortgage forbearance. If there are other issues that you want to deal with, as Dave said, please let your rep know. I'm more than happy to answer those questions. I have spent a ton of time, not only with reviewing the CARES Act, but also spending time drafting the new version. There's going to be a version 4.0. Right now we're at version 3.0 of the CARES Act. and I am in the middle of drafting version 4.0, and I'm doing it on behalf of the title industry and the real estate industry. So that's something that is very important on a go forward basis. But I would love to hear from anybody that wants some input, or wants to provide input, because it really is crucially important. If there's something that we're not getting correct, we definitely want to get it done correctly. So the forbearance portion of the CARES Act. Forbearance portion of the CARES Act basically is a handful of different topics. And what they do is they basically allow mortgages to be postponed, delayed. You'll have situations where foreclosures can't go through. So we'll discuss all of those issues. But it is something that is in place right now, and we're dealing with it on a daily basis. The first part of the CARES Act is a full non-payment of the loan. So let's say, for example, that you have a client that can't pay their loan. So they can apply under the CARES Act for a non-payment of their loan. And what happens is that basically they don't pay it. They put it in, and then the loan rolls, the amount of the money rolls to the end of the loan. So for example, if you have a 10-year loan, you basically have a year up to 2 years, depending on where you are in the CARES Act, and you can roll that to the back of the loan. So for example, if you have a 10-year mortgage and they can't afford it, they make an application under the CARES Act that they can't afford to pay. So what happens is that loan gets postponed for a year or two, gets rolled to the back of the loan, no negative benefit or no negative statement to their loan. They just basically move it to the back of the loan. That loan pretty much has to be a Fannie or Freddie loan. So there may be a delay in that Fannie and Freddie has to actually purchase the loan. If it's something that's been portfolioed by the lender probably will move it to Fannie or Freddie, which is fine. But they will move it to they'll move it to Fannie or Freddie, and then they will go ahead and then you make an application for it, and it's about 30 to 45 days or so until you get a notification from Fannie or Freddie, and then your loan that was 8 years is now 10 years. It was 10 years, now it's 12 years, whatever it happens to be. So that's the most likely thing you're going to see, is you're going to see mortgages that have been postponed for a little bit of time. In almost all those situations, literally almost all those situations, they will be not only postponed, but you won't have any type of issues with the amount. So for example, if you're paying $1,500 a month now, you'll be paying $1,500 a month into the future. There will not be a penalty for it. So that's number one. Number two is you'll have a partial, in which case when you put the application in, the GSE, Fannie or Freddie, will basically say, yeah, we think you can afford part of this, but not all of it. In which case they will give you a partial deduction. So if you're paying $2,000 a month, you'll pay $1,000 a month. $1,000 goes to the end. $1,000 needs to be paid now, and they will restructure your mortgage in order to allow the fact that someone's lost their well-being. Now, I want to make sure I'm super clear. You can't just do this to do it. You have to show some type of COVID problem, as in somebody's they have COVID, somebody in your family has COVID, or your company has had a reduction in force because of COVID. So it's not like you can just simply say, no, I don't want to pay this. You do have to show that you've had a problem within your family. But I got to tell you, from what I've seen so far, that's not a real high bar, because let's face it, we've all had problems with COVID, because if we didn't, we wouldn't be on this phone call today. And we wouldn't be doing Zoom, because I didn't even know Zoom existed, a few months ago. But we all know it does today. So, for example, you can definitely say that you can make an application for a partial, or your clients can make an application for a partial. And then basically you just need to be able to demonstrate that, yes, something has happened with COVID. It has disabled your ability, or your clients, your customers disabled their ability to pay the mortgage. Then they go ahead and they can make an application. And then everything gets postponed or deleted or whatever it happens to be, but they can certainly reduce the amount. The other is you can actually have a full, if you can make an application for a full deferral, in which case, again, Fannie and Freddie would have to agree to it, but you can make an application, or your clients can make an application to say that you have been, there's the deferral that is requested, in which case the entire amount would just be forgiven. So for example, you have a $2,000 a month amount that would be normally paid. And you can certainly make an application, and they can say, you know what, you don't have to pay anymore. That is fine. That is one of the options. The Fannie and Freddie have the opportunity, or the option of saying a full or partial, or simply, you know what, we're simply not going to require you to make the payments, and they can actually just cancel it. So that's the other option. Option number 4 is that you can do a request for a renewal, and they can redo the entire mortgage that you have, and they can simply say, okay, we're going to take this from a 10-year with a payment, to a 15-year fixed, to a 30-year fixed. We can take it from X amount of interest rate to Y amount of interest rate. They can do all of that for you. And as you can probably see on the varying advertisements that are out there, they are definitely willing to work with you. And part of the reason they're willing to work with you, and willing to work, I keep saying you, and I shouldn't be saying that, it's willing to work with their clients. But the reason they're willing to do that is because the banks are being subsidized by the federal government right now. And so if you have a situation where there's a payment that is due, they will waive that payment, and they will reconstruct your note, and they will basically do a rate and term your loan. So sometimes that will mean title insurance, sometimes it won't, but if it really is, honestly, it probably does mean you need to rate and term. You probably will have a title insurance issue. So,
Bill, question for you.
Of course.
If you do that, is your FICO going to get affected, and will it affect your ability to get a loan in the future?
Great question. And I've done probably 10 of these so far around the country, and that's the number one question that's always asked. And I will give you my best lawyer answer, which is it depends. So the answer is like, yeah, it could affect you, but it may not affect you. And that's why communication is so important. The people that I've seen had issues with this are people that have not communicated with their lender. They have let it go into default, and the lender immediately puts themselves into the fact that you're in breach. So when the lender puts there, then that's fine, and then you can pull it back, but it's really tough to do. That's why I really, really recommend communication with your realtor and real communication with your lender, and really work with the fact that, okay, I got this issue, here's the problem. The lender can pull that back without having to put it on your credit report. So it's really important to be upfront. It's not embarrassing. I mean, that's the thing, is a lot of people feel, well, it's really embarrassing, I don't want to do that. It's not embarrassing. This is unprecedented. And we need to really appreciate the fact that this is an unprecedented situation. Calling the lender and telling them that you have an issue is not a problem. They are looking for problems. They're looking to help, and they want to help you as much as they possibly can. So yes, could it hurt you? Yeah, it could hurt you. But you really can solve the problem ahead of time if you're willing to take the step of being proactive and calling your lender saying, I got this problem, here's what's going on, and how can you help me? Lenders are falling over backwards. And just so you know, one of the reasons they're falling over backwards is because they have opened up the Fannie and Freddie requirements. They used to have to portfolio 25% of the loans. They don't have to portfolio those loans anymore. So they can sell loans that otherwise would have been troubled loans to Fannie and Freddie. So letting the lender know is not a bad thing at all, because now the lender can then go to Fannie and Freddie and say, okay, this is a problem loan. These people have an issue, and they can work on it with you. So again, it's a great question, but it really depends on the situation, and it really makes a big difference how early you get to the lender if you have a problem. If you have an issue or your clients have an issue, help them. And there's a lot of help out there. There's a lot of help.
Bill, what about property taxes being unpaid?
Yeah, that's a problem. Property taxes being unpaid. There's a lot of talk about whether or not there should be forgiveness of property taxes. Unfortunately, we just simply don't have a statute right now or a regulation. We are probably in California as backwards as anybody on what the rules and regulations are. So property taxes need to be paid. If they don't get paid, I got to tell you, the other part of that equation is that you really can't foreclose on property taxes in the foreseeable future because all the courts are closed. I did a 3 or 4 hour deposition yesterday, which normally would have taken 1 hour because all the courts are closed. So I got deposed yesterday. It's very difficult out there right now to do anything like that. So I don't anticipate that a problem, but certainly property taxes are more important to pay than other types of bills.
You know, one question comes up is this for your primary residence? What if I have a rental property and that renter's not paying my rent and now I'm upside down on that rental property?
One of the questions you're going to get asked on the forbearance is whether or not this is your primary home or your rental home. They don't have to do it. They meaning the government does not have to redo it. If you have rental property, the chances of a forbearance is less likely. Doesn't mean you don't apply for it, but means you have a lot less chance of getting that forbearance. The fact that no one's paying for it definitely helps your cause. But it does mean that you're going to have a little bit of a tougher issue, because it really does make a difference whether it's your primary residence. It really matters whether or not I guess we take a step back. What really matters is that the government wants to keep people in their homes. That's the number one issue that you have out there. They want to keep people in their homes. We don't want to have 2007, 2008 again. We just don't want to have that. So there's a lot less sympathy for rental homes than there is for primary residences. Doesn't mean you won't get it, just means it's more difficult to get. I got a handful of questions, so.
I think I'm going through them with you.
Oh, okay, then go ahead.
Yeah. I guess there's what happens if the house that's not selling is running low on monies on a reverse mortgage?
Great question. And actually, it's funny and I'm just going to cancel out. I figure you'll ask the questions, so I won't bother typing those back up. But reverse mortgages are pretty simple. They're basically forgiven. Don't even think about it. If you have a reverse mortgage only kicks in upon sale of the home. So if you can't afford it, you can't afford it. That's fine. Again, it's all about communication. And this is totally about communication. Let your lender know. I can tell you my parents have a reverse mortgage on their home. Pays for they're both in nursing facilities, unfortunately. But it does not matter. As long as you have a situation where you have a reverse, it's not going to make any difference whatsoever. But again, communication is the big deal. Don't run away from the problem. Communicate with the lender.
Yeah. Okay. That's pretty much the questions on that topic. We already answered about second homes. And Bill, in regards to the forbearance, there's things seem to be changing all the time with that. And I know you're on the cutting edge of that. And a little while ago, just a few weeks ago, lenders were saying that it wouldn't be recorded. And where are we with the forbearance today?
You know what? I could discuss it today and it may change tomorrow. So forbearance, some days are a little easier and then some days are a little bit more difficult. But make your application, have your client make the application and see what goes on. Because I think forbearance is going to be more and more difficult as time goes on, just because of the amount of money that goes on, the amount of money that's out there. So that concerns me a bit, but that's okay. And then I also have another question up here is, how do you know it's a Fannie or Freddie loan? You need to call your, one of the questions I had on a chat was, how do you know if it's a Fannie or Freddie? Contact your title rep. Your title rep can contact the title department. We can get into the MERS, which is the National Registry of Transfer, and we can determine whether or not it's Fannie or Freddie. It's about 10 minutes of work, tops.
Okay.
Easy to do. One of the reasons why you have a good title company, because they will be happy to jump in and help you on that. Because we are part of the MERS registry, and the title industry helped fund the MERS registry. So happy to do that.
And you know, when you're talking about communication, what's the best form of communicating with your lender? Obviously, we want to document any conversations we have, right? So that we can say we had them.
Actually, I'm going to disagree with you.
Okay.
I would say the best way to document that is to call, pick up the phone, talk to somebody personally, and then follow it up by an email. Because emails are really easy to discard, or I think we all see an outrageous amount of emails every day. But I always believe in calling and then confirming by email. And if you notice, when you do your online banking, for example, what happens when you do your online banking? What do they do? I don't do online, but it's like when you go to the bank and they send you, it's a confirmation of something you've already done. And that to me is the best way of getting it done, because now you have a conversation with a person, and then you confirm it over email. That to me is the best way of taking care of it. But I don't like just, I send an email and then you take a step back.
Yeah.
Because that to me is, it's frustrating to me when somebody does that to me, but you just got to step in and say, okay, I'm going to step up and tell some, and then you have a name. Because what happens, the first thing, what's the first thing that happens when you call back to somebody? Who did you talk to? That's the first question they ask. And if you don't know that answer, they kind of just blow you off.
Yeah.
So you have a conversation, and then you write it down, and then you cement it by an email. It's the best way to go. I got to tell you, the lenders right now are all over customer issues and customer complaints and problems, and they are more than happy to help you. More than happy to help you.
Yeah. So when you get a hold of your lender, are they going to send you the application, or how does one go about actually getting a application? Is that online?
It's both online, and the lender will send you an application, either one.
Okay.
It's simple. It's really simple.
Okay.
Now, getting it approved is not altogether simple. I don't want to simplify that, because that is not easy. Because they'll apply, and then most likely they'll get turned down, and then there's frustration, and they'll want something else. I get all that. I completely understand that. But it does matter that you submit the application and you get it in, and then you work with your lender and make phone calls, send follow-up emails, etc. But it is doable, and I've seen it done, so it's not impossible.
Well, I think they understand the investment property component, but what about your second home if you have a forbearance on your primary?
That's one of the questions that is on your application. That is actually stated on one of the 10 questions on your application, or 20, whatever it is, questions. Do you have another forbearance? If you do, it's a problem.
One at a time.
One at a time. One at a time.
Can you have more than one over a period of time?
In theory.
In theory.
I don't know. I mean, yeah, probably, yeah. Probably.
And you say that this is such a fluid situation. What makes it so fluid? Is it the politics, or is it the banks? Or the economy? What makes it such a fluid target?
Yes.
All of them.
All of them. I mean, imagine like 3 months ago, banks had to hold 25% of their property within their portfolio. Today, we've opened up trillions of dollars for those properties to go into Fannie and Freddie. That was not the case weeks ago. They may pull that back. They may expand it. I don't know. I really don't know. But I do know that is an issue, because obviously if you're a lender and you can pull money back out of your portfolio and the loan is in default, of course you'll do that. Why wouldn't you? So it varies by the day, by the week, by the month. And then I got a chat question that, how do you know if it's a Fannie or Freddie? Again, we can pull that, we can find that out for you. Of course, it has to be under 734,000, somewhere in that range. Has to be, the loan has to be under that, not the value of the home. But we could certainly find that out for anybody that wants it. And then again, what is today is not tomorrow, is not next week. And again, more than happy to help any way we can.
And Bill, in your experience so far, is there a percentage of approvals? I mean, where are we getting? Are we batting 50-50, or where are we with that? Do you know?
90-10 approved.
Oh, wow. That's huge.
Yeah.
Okay. And then again, you know, we're speaking specifically with the GSEs, correct? They're the ones
Well,
that are doing this.
yeah, I mean, the thing is, it's like not necessarily, because like Quicken and Wells and I mean, they're all doing things that that are really doing phenomenal things to help the consumer, but it just is a little easier with the GSEs. That's all. And that's just a matter. I mean, you could close with B of A or Wells or whomever. It doesn't matter. But whoever's holding the mortgage is who makes the decision ultimately.
Okay.
Whether it's Wells or Fannie and Freddie or whoever it happens to be, FHFA, doesn't matter. What does matter is the fact that you have a situation where you have somebody with the decision-making ability, which whoever's holding the note. So that's where we can help you as a title company.
Obvious. Okay, cool. Yeah, we get questions all the time about loans, but we also get questions about what's left on the loan, and that's the stuff that we can't find. But
that's really not difficult to find out. That's pretty basic.
Okay.
That's
So
really now the consumer needs to get that information, but that's not the problem. The problem is, unfortunately, is embarrassment, and the consumer does not want to talk to their lender and ask them questions. And ultimately, that's the biggest problem we have. Is like, it's embarrassing that you can't afford to pay your mortgage. I get that, but pick up the phone, suck it up, and get it done. Because ultimately, being as upfront with your lender as you possibly can is the most important thing you can do.
Yeah. Do we have any more questions for Mr. Burding? I think we've kind of made sure that we've answered anything. Bill, do you have any more insight into things for us?
No, again, the only thing I would say is that this is one of those opportunities that having a good relationship with your title company can really help your clients, because we do have access to the MERS registry as well as other accesses that we can help. And I think it's really important to be able to use your relationship with your rep. More than happy to help. Again, these are things that we do all the time. More than happy to help. And I just want to make sure that don't let your client be embarrassed about a situation. This is a tough, unprecedented time. Just help your clients the best way you can, and we're here to help you.
All right, we got one more chat, Bill. What they're trying to understand, what is it they've heard that Freddie and Fannie are buying the loans at the lender's request? You heard that?
Yeah, that's really rare. There would have to be something that would be odd with it, because since they have eliminated the requirement of the 25% portfolio rule, they have been basically buying up loans left and right. So there would have to be something really, really odd with that particular loan. And I would be more than happy if you had a situation that was that fell within that situation. I'd be more than happy to speak with you aside, because I gotta tell you, the vast majority, I mean, like almost 100%, we're saying Fannie and Freddie buy up. So there'd have to be something pre-existing, pre-COVID, for the loan not to be purchased, such as a first payment. Obviously the biggest problem you have is the non-payment of the first payment, which is the telltale sign of fraud. They're not going to buy those just because of COVID, but they will. I'm more than happy to help whoever that has that situation, but it's an unusual situation, but it does happen.
And Bill, what if somebody has a HELOC on top of their normal mortgage? They have that second.
I would certainly suggest consolidating it right now. You can refinance pretty easily. You can do a rate and term, and the banks are really amenable to doing it. Actually doing it for my daughter right now. um, that she lives in DC, and I told her, it's like, let's just get this all done in one fell swoop. So
Yeah.
um, it's a great time to reach out to the lenders. I can't tell you how good they are to work with right now. I mean, the lenders, they get a little bit of a get out of jail free card right now, in that unless it's a first payment default, they're can pretty much transfer this over to Fannie and Freddie. There's no portfolio requirement anymore. And so they're really amenable to working. And so I guess if there's anything I can do out of the half an hour or whatever it is, 45 minutes, whatever it happens to be, I would just say it's all about communication. And communication is just so unbelievably vital. Call. They are more than happy to talk to your clients. If they can't afford to make a payment, they want to sell their home, getting a forbearance for a period of X amount of months while they put the home in the market, great. They're more than happy to work with you. The banks are falling over themselves to work with you. They could not be any better. So this is the time. The one problem that I see is people just don't talk. They just keep it to themselves because they're embarrassed of the situation. Don't let your clients be that way. Reach out and talk. And I got another question on here, by the way, on the chat. Is refinancing the only way to getting a rate and term? No, you can actually get a rate and term without refinancing. So if you have a client that wants to do a rate and term, they can do without refinancing. Now, there's an issue on whether or not the lender will require a title insurance. I can't tell you one way or the other. It depends on the lender. But yes, you can do a rate and term without refinancing your entire transaction. So that's one of the 4 options that they give you under the CARES Act, is simply doing a rate and term. So they literally could go from a 10-year ARM to a 5-year ARM to a 30-year fixed, and they could do all that without having to do an entire refinance. So yes, that is certainly possible under the term of the CARES Act. Also, just without getting into a lot of minutia, there's other parts of the CARES Act that I did not discuss today. Your 401k has been affected by the CARES Act. If you have an issue with your 401k, you can certainly look at that. There's all sorts of varying things on the CARES Act. Literally almost nothing that you have financially is unaffected by the CARES Act. So whoever you would go to for that particular issue, go to them, because it is wide open right now. And talk. And again, I sound like a broken record, but communicate. And that's the most important thing I can possibly tell you today.
And you know what,
reach out.
Bill, you touching on that piece, one of the things that we always try to tie in with everything that Cal Title is trying to deliver to the brokerage is where the opportunity for the agent is in this, with CARES. And it sounds like, and you know, that the biggest thing that the agents could be doing is reaching out to their database, reaching out to their past clients and talking to them about the CARES Act, and that there's help out there. Do you agree to that?
Totally. And the other part of that equation is there are people that have been laid off, and it's awful. And I get that. And the biggest amount of money that they have in any one thing is their home. It may be time to either get a reduction in payment, maybe time to sell their home. But reach out to your customers and say, hey, look, what can I do to help you? Here are the various things that can be done. You can have a reduction in payment. You can do a rate and term. You can have a forbearance. You can have a partial forbearance. Or you know what? Maybe it's just simply time to sell your home. And you could easily do something where you have a situation where you reach out to your lender and say, I'm putting my home on the market. I can guarantee you, not guarantee, I'd say probably an exaggeration. I can pretty much be 100% convinced that they will give you forbearance while you have the home on the market. There is just a shortage of product on the market right now, especially in Southern California. We have a huge shortage of homes, and homes are going as quickly as they go on the market. Now they've slowed up because of the pandemic, but we are still watching homes go as quickly as they possibly can go. And so if you reached out to them and said, hey, look, I'm going to sell my home, that is, the lenders will go out of their way to be courteous and to do what they can.
Awesome. Okay. We appreciate that. Let's see if we have any last questions before we round up. Anything with credit card debt or student loan during this period of time?
No.
No.
Credit card debt is not, I guess the one thing you could do is if you have credit card debt or student debt, kind of take a second, put it on your real estate. Real estate is definitely forgivable. Credit card and real estate is not. Today. Doesn't mean if we did the same conversation tomorrow that I would say the same thing, but today, no.
Cool. All right. Well, thanks, Bill. It sounds like the big takeaways from here is obviously number one is communication. Number two is understand as much as you can about the CARES Act. Leverage it and reach out to your clients and see if you can be of service to them and if you can help them and guide them in the right way.
And I guess the other thing I would say is reach out to your title rep if you need anything. And if you need something else, I'm more than happy to help not only the agents on this call, but more than happy to help the clients as well. I mean, I talk to so many people a day, I can't even begin to tell you. And I am actively working on, there's been 3 COVID bills that have gone through, and I've been participating on all of them on behalf of the American Land Title Association. I am actively participating on COVID 4. So the industry just goes out of their way to make sure that I am up to date, and I'm more than happy to make sure that Cal Title and all of our very, very valued customers are up to date too.
We appreciate that, Bill. So one last one before we go. If you could expand just a little bit on the reverse mortgage piece.
Sure.
We want to make sure we answer all our agents' questions.
Happy to. Reverse mortgages are pretty simple in that you don't, as long as the person is still in the home, nothing changes. Literally nothing changes. If they move out of their home, everything changes, as in the entire reverse mortgage becomes due. Oh. So if you have a person, it doesn't have to be, by the way, it doesn't have to be husband and wife or spouses or whatever it happens to be. It just has to be somebody in the home that took out the reverse mortgage. Then as long as one of them are in the home, you're good to go. It makes no difference whether they're both in or not. But if once a year you have to sign an affidavit that at least one of you are in the home. And so as long as one person's in the home, nothing changes. And there's no forbearance, by the way, on a reverse mortgage because you're actually getting paid. Wow. So there's not you can't like forbear, you can't get like a check for $2,000 a month and then have forbearance of that. So it doesn't work that way.
Awesome. Okay. All right. Well, thank you, Bill. Again, you're a wealth of knowledge, and we appreciate you taking the time out of your busy day and your schedule to be here with us. And again, we're available to answer questions anytime. If you have questions specific to a transaction, get with your sales rep and we'll get those answered for you. So Bill, thank you, appreciate you. And we'll talk to everybody sometime here in the near future. Appreciate it, Bill.
Thanks, everyone.